Okay, welcome. Here we are, how to help your clients invest in real estate. What an exciting conversation, exciting time. And welcome to this session, the first of many of our sessions that we're going to cover here over the coming weeks with MAPS. And my name is Matt Teeter. I'm the director of leadership coaches with MAPS and a MAPS leadership coach. And I'm here with Brian. Brian Martin, go ahead and introduce yourself.
Yeah, Brian Martin, MAPS leadership coach and head coach for leadership coaches.
Yeah, well, that's the important thing to get out of the way, because it doesn't matter who's operating the call so much or what's happening here. What matters is that what you're going to take away from today's call. So Brian and I've got a little bit of content for us to cover today. We're going to jump right into that. So let's get started here. Brian, here's the foundational model of the MREI, the Millionaire Real Estate Investor book. And when we get started in looking at this, the idea today is, how do we teach our clients how to invest, right? So this is kind of going to sit in the background here for a couple minutes for us to think about the foundation of our thinking and what's important, right? For us to think about being an investor, or to teach our clients that. Yet you had several questions as we talked through this about getting in the right mindset to teach our clients how to invest. So right off the bat, what do you think of?
Yeah, I think a good part is we're exploring this today, and the topic, right, of how to get your clients thinking like an investor. Sometimes we have to look in the mirror first and say, are we thinking like investors, right? So something I would have you think about is oftentimes what we found is agents that work with a number of different investors, it's not on accident, right? It's actually very purposeful. We as leaders, we teach people how to think, right? So if you think of yourself as a leader, which you should, then what you're going to say is, how do I teach my clients, the people that I've already helped to buy or sell real estate, how do I help them to think bigger and think of the possibilities that they have to invest in real estate and build wealth through that? So oftentimes, I think we kind of shy away from the conversation, or maybe we don't have all the information, or we don't have all the answers. That's some of what we're going to be talking about today. So I think that mostly what we're talking about in this foundational model today is a lot of how to think, and a little bit of how to, probably the mindset of how we buy and own. But I think a big part of this is, again, if you're looking at your world saying, I'd like to work with more investors, a piece of it is there's a value in that, right? You create clients for life if you are helping them to build wealth. Another piece of that is if you look at all the transactions you do, right? Are you working with people that are going to buy or sell a home every 7, 8, 9, 10 years? Or if you work with investors, you're actually working with people that may be buying a home every year, right? Or Matt, like we work with a group of coaches, and the goal of the coaches in that group, in that mastermind, is we invest in multiple properties a year. Imagine if that was your client base.
Well, yeah, and that's exactly right. So one of the things is what you're saying, Brian, is when you sit down in a first-time home buyer seminar, or when you sit down with a buyer's consultation for the first time, right? Do you sit down with the intention of building that client for life and teaching them how to build wealth in the first conversation? Are you asking questions like, how many homes would you like to buy? Would you like to buy one home or more than one? Right? Are you asking them, what is your investment plan or wealth building plan? What does your investment portfolio look like now? Are you noticing things when a client comes to you and they say, we asked this question, I need to sell a home in order to buy a home. So we ask clients very, very often, do you need to sell your home currently in order to buy one? And sometimes we think about that from the standpoint, or very often, of, ooh, there's another transaction, or ooh, there's another referral. And what we're challenging you to think about is, well, any client that says, well, I have another home and I don't need to sell it to buy this one, are you being triggered to think this client is already an investor? Because what they're telling you is they're buying a second home. So how many of your clients, as you go back through this year in 2020, many of you had all-time record years, how many of your clients told you, no, I don't have to sell my home to buy another home? And did you ask them the questions about investing? Did you position investing? Now, one of the things about like, how do I teach my clients how to invest? It seems could be overwhelming. Yet the MREI book was written and delivered in such a way that you could gift it to your clients. In fact, that was part of the intention behind the book. That you at closing, right? We give these elaborate closing gifts, Brian, right? So, this could be the takeaway. How do we teach our clients how to invest? Well, you have a book, it's sitting right here. I'm sure you guys have it too. Let's see the page number, right? 400 and a 400-page document of how to invest, right? Are you giving it away at every closing? Are you gifting it to every client? Some of you are giving them amazing things, whether it's a bottle of champagne or a gift basket, or right? Is this included? That's one way to teach them. Some people say, well, what if I did an investor seminar, right? What would I base it on? How much knowledge would I need? Well, have you gone to kellerinc.com and downloaded the investor seminar and presented it? I mean, this material is already prepared for you. It's already there to download. It's already there for you to teach. What Brian and I are intending to unlock for you today is, how do you have that thought process to be able to say, okay, I already have the tools. I already have what I need. How do I give that away? How do I get that to someone, right? Give them the book. Are we giving that away, right? Giving them the presentation. Are we asking every client how many homes that they're going to buy? Are we asking every client, right, when they say, I don't need to sell my other home? Great. How many additional investments would you like to make? And what is your goal in wealth building through real estate? Does that make sense?
Sometimes it's right in the middle of the transactions we're doing, right? So sometimes we think about this and we go, well, who are millionaire real estate investors? Like, do you have to have a ton of wealth to do it? Do you have to be a high net wealth individual? What is that? Or maybe you say, well, I work with a lot of first time home buyers. I mean, this may be a long-term play for me. It may be, but it's everywhere in the transactions we already do. So if you're working with first time home buyers, were they renting a house? Like, were they living in a property? Have you ever looked into who owns that property? Right? They are an investor, and your client, who's going to now be a first-time home buyer, they were the person that was funding that investment, right? So how do you network through people like that to find more people that are thinking like investors already, right? That's a way to grow. That's a way to build a great database of people that you're working with that are already thinking like investors. What we're talking about today is how to help people that may not be investors yet, how to help them start to think that way. And what we're really talking about today is some of the common myth understandings or the common objections you may hear in these conversations, to help you to be able to speak with your clients differently, and also maybe for you to look at yourself differently, right, and think about this differently.
So Brian, what I hear you saying is, are we intentionally teaching our clients how to invest? Mm-hmm. Are we intentionally teaching them, right? This is what you're going to do. First thing, right? How do we teach our clients to invest? Do we have intention? Are we giving the book away? Are we providing the seminar, right? What I heard you also ask is, from the standpoint of, why would I teach this? Well, you asked the question, what if I was missing 50% of the referrals that I could receive, right? What would change if your clients knew that you could help them to invest? What would change if your allied resources knew that? What would change if the people that you do consistent business with knew that? What would change if you were telling that story to your clients? How many more referrals would you be receiving? You asked another question earlier before we move forward, right? Where you said, are your clients investing on accident or on purpose? And that goes back to the point where they're not selling their first home to buy a second. Well, they're immediately now an investor. So are you helping them realize that because they don't have to sell their first home to buy their second home, they've stepped into the world at the base? They're already an investor. They just may not be thinking like one. And then how do we allow them to see, well, hey, if we were going to build wealth this way, maybe $1 million or more, right? The first step that we would do based on this model is we would buy $1 million worth of real estate, right? Following the model systems. Ultimately, we would own $1 million paid off, right? And then we'd be able to receive $1 million in passive income through that. Are we walking them through those steps? Are we helping them to take that forward? So really, as we move this forward, it's okay to think and invest. There's 3 different ways that we think, right? And this is how we need to teach our clients to think. It's how we think as agents, how we think about our own investments, how we think about our own careers, and it's how we teach our clients to think. This is all in the MREI, the Millionaire Real Estate Investor book, guys. And yet, right, just looking at this to kind of think through, how do we teach this to our clients? One is thinking a million. What does it look like to own $1 million worth of real estate? What would change in the client's life? What would change for their family? What would change for their future? What would change for generations to come if they owned $1 million worth of real estate? What does it look like to cast that vision for your clients? Now, number two, think real estate, right? Think real estate. Are they thinking about making investments in real estate? If you think about it, they might have a bank account where they have their money, it's generating a small return, right? They might have a stock account or 401k that's generating a little bit higher anticipated return. They might have bonds or some other things. It's kind of in the middle. Yet the biggest investments that they're going to make and the biggest returns, right, for their lifetime as they grow their wealth as a client for you are going to be through things like investing in businesses or in real estate. Are you helping them think real estate and teaching them how to think about it so they see this as an asset, as a way to build wealth and build a partnership that's deeper with you? And then thinking value, right? Thinking value. So are you helping them see what value looks like and what making a great purchase in their environment or in their area or where they're comfortable with or in owning real estate could be, and how they create the criteria and the terms and develop a network in partnership with you. So not only are they a client for life, you're helping your clients become millionaires through real estate. Wow, that was a lot. Brian, what would you add to that, or what else would you say on there?
It's really just something that they actually put it in the book, right? In the title page, it says anyone can do it, not everyone will. The things we're talking about today are likely the objections or the things that you say, like, anyone can do it. Is that true? What is it? Can I do it? Can this client do it? Can it? And the answer is yes. There are some things that we're talking through right now. So I think we'll just jump right into it and kind of look at what the different myth understandings that we have. Today we're going over 3 personal myths and then 5 myths that are about investing. And we're also going to have some time at the end of this, so you guys are clear that we'll be able to do some Q&A if there's additional questions about this topic today. So first personal myth, and again, these are right out of Millionaire Real Estate Investor. We're talking about how to think through it, right? The first personal myth is, I don't need to be an investor. My job will take care of my financial wealth. Matt, what do you see as a way to if we're going to bust that myth?
Well, the simple response to that is that you do need to be an investor. Your job's not your financial wealth. And let's look at that in a couple different ways, right? Your job income, right? For us, it's real estate. For those of you on the call, for the vast majority of the people that are listening to this or here live, it's real estate. And even in real estate, where you can generate an incredible amount of income, an incredible amount of cash flow, right? How much of that are you reinvesting, right? That reinvestment is what you're going to drive your freedom. That reinvestment is going to drive your wealth. That reinvestment is going to drive the assets. The job of real estate, and we have some of the highest earning potential of any position, in and of itself is not necessarily, and often does not, we see that often in our profession, generate any wealth. People leave the business and they take, unfortunately, nothing with them. Now, if they're in Keller Williams and they haven't maximized profit share, or they haven't maximized real estate investment or other things that we teach, right? That's really challenging because we're here to position that. Yet jobs themselves do not necessarily equate to financial wealth, because the job is just a way to generate income. And if you were to look at page 139 of the MREI, you'd see the personal path of money. The way that you generate income, right, is then you have a decision to make. Are you going to spend that money, or are you going to invest it? The investment is the line that drives directly to the wealth that we generate. So again, the idea that the job income is going to take care of your long-term financial wealth is promising or guaranteeing or betting on two things, Brian. Number one, that I'm going to continue earning so much income, right, that I'm going to out earn my spending, and I'm going to create a level where that money is going to allow me to live comfortably forever. And number two, that I'm never going to stop working. And again, if we look at those two things, those are true for almost, just about nobody. So financial wealth is going to be created through investing. And that's why becoming an investor is crucial. And the other piece, Brian, we both know is that over 90% of the world's wealth is held in real estate. So again, becoming an investor is exactly attached to where the world's wealth is held.
Yeah, there's an interesting story in the Millionaire Real Estate Investor book about James Sorensen, and it talks about in the 1940s, he had a job selling medical supplies in the Salt Lake City area, and when he would go to meet with people, he would, instead of taking them to lunch or something, he was looking at like, well, I can just take them to get a soda or get a coffee or something, right? And he actually got in trouble for that. His boss said, you have to expense at least $30 for every client when you go to meet with them, or you're going to get us all, you're going to get us all in trouble. You're going to ruin it for everybody, right? And he's like, well, I only spend like $5, and the guy's like, I don't care. That you have to expense. You're going to get reimbursed for 30. So he starts doing it, and he starts buying these acres of land. And at the time, he's buying it for $25 an acre. Basically, every time he went to meet with a client, he would take them for a coffee for $5. He'd expense it for 30, or he'd lose his job, right? He takes that 25 and he invests and buy an acre of land, right? Well, later on, after the uranium boom hit, the plots were selling for thousands and thousands and thousands of dollars that he bought for $25 while doing his job. So again, oftentimes we think like, oh, how do you start doing this? Do you have to start with $1 million to be a millionaire real estate investor? And the answer is no. Start from where you are, find the opportunities in what you're doing today. If you're currently an agent, think about how do you take a portion of each commission before you spend it, before you do anything else. You're putting it in an account, and when that account hits X number of dollars, you're buying an investment property. Now, whether that's 2 months, 6 months, a year, I mean, that's up to you, and it's up to how much money you put aside, right? But part of the thing of causing other people to think like an investor is for you to look in the mirror first and say, I'm going to do it. Here's how I'm going to do it, and you'll find opportunity for your clients also.
Okay, so here's the second personal myth, right? The second personal myth, and this one's on page 45. If you're following along in the Millionaire Real Estate Investor at home, which I'm sure you are, right? Is I don't need or want to be financially wealthy. I'm happy with what I have. And the truth there is you need to open your eyes. You do need and want to be financially wealthy. So as we lean into that truth there, as we go further, Brian, there's a story that struck you this week that you shared with me. And I think it's a perfect example of how we overcome this personal myth. So would you share that with us?
Yeah. So Mackenzie Scott, who started Amazon with her then husband, Jeff Bezos, right? They got divorced. At the time of her divorce, she had $38 billion of net worth, right? And something I thought was interesting is there was an article that I was reading this week that it said in each of the last 4 months, she's given over $1 billion to charitable organizations a month. So to be exact, in the last 4 months, it's been $4.2 billion in 4 months. And these are to charitable organizations in the United States, right? So sometimes we look at this and we say, I don't need or want to be financially wealthy. I'm happy with what I have. And that's true because that may be true, right? Because you look at it and you say, I'm able to provide for my family. We have a nice house. We have a good living. And just for a moment, imagine this, right? So I looked at it into a little more. For her to decide it's $4.2 billion that she's given to 384 different charitable organizations in the last 4 months. To get to that, she and her advisors looked at almost 6,500 different organizations. I mean, can you imagine what it would feel like to be reviewing charitable organizations, 6,500 charitable organizations, to decide who will receive part of this 4.2 or billion dollars every month? They narrowed it down to 822 and finally down to 384. In the last 6 months, it's been over $6 billion of charitable giving. And I mean, part of her wealth is Amazon stock. So just if you're curious, she started with 38 billion. She's giving it away as quickly as she can, and she's up to 55 billion in current net worth. How's that for abundant thinking?
Well, so Brian, I love the example that you brought for this because, why are we going through these myths when we're talking about how to teach your clients how to invest? The two purposes of this, again, is number one, ourselves getting on the journey and thinking through that as real estate agents, right? And real estate professionals, because if you were doing what you're going to do and investing in real estate in the stock market, it would be called insider trading. And it would be illegal, right? And we would have major problems. See, in real estate, you can insider trade, right? Meaning that you can use your unique knowledge to be able to make purchases and enrich yourself through what you've gained as a real estate professional to that degree, right? Which is really incredible. The other reason why we're doing this is fundamentally the question is, why don't more of our clients own more than one home or own investment properties? And where it starts is it starts with their thinking. And so you approach this from let's go really big. And what would it look like? What if? The other side of this is there's an assumption in here that says that I'm happy with what I have, and what I have is all I'll ever need. Right? Even if that's 100% true, is it all that your family will ever need? Is it all that your friends will ever need? Is it all that your spouse or significant other or your kids will ever need? Do you wish to have an impact on other people, on your community, on your lifestyle, on your family to give? And if so, is there a potential or a piece or a level that you'd like to stop at? You just heard one of the highest levels in the world, right? So what would it look like to be able to do that? Well, not $1 billion a month. How about $1 million a month? Not $1 million a month. How about 100,000 or 10,000 or 1,000 or $1? Yet, would you like to make a bigger impact? The more wealth that you have, the more of an impact that you can make through that source. And it may be for your family first, right? And it may be for the rest of the world. Here's the biggest thing. I'm excited for people on this call to save the rest of the world. So let's not buy into the myth, right? That we don't need to be financially wealthy, because someone on this call is going to make an impact on all of our lives. And I'm excited about that. And I'm excited for you guys doing that. So let's look at the third personal myth. Third myth is, it doesn't matter if I need or want it. I just can't do it. I wish the truth said stop it. The truth says you can't predict what you can or can't do until you try. So, Brian, when you look at this personal myth, what comes to mind for you?
There's an example, and Gary Keller often talks about, probability thinking versus possibility thinking. And it brings us back to an example of, think back to when you were a child, right? When you were a kid, you probably said, like, when I grow up, I want to whatever, right? So,
but because we're part of Met, they give us the.
Oh,
there you go.
Hold on here, guys. Hey, this is live, so it means that you're live too. So if you could press mute, we'd appreciate it. So we were talking about page 53 and possibilities and probabilities, Brian.
Yeah. So possibilities and probabilities. If you think back to when you were a kid, right? When I was a kid, I said, when I grow up, I want to be an astronaut, right? Because when you're a kid, you think about, you dream big, right? You don't talk yourself out of your dream. I remember one year for Halloween, I even had like the 2-liter bottles of soda. We spray painted them black, and I dressed up and I was an astronaut that year, right? I hate to break it to you, I didn't become an astronaut, right? At some point, there was something that I changed my mind, right? I changed my mind on that dream. Matt, do you remember what you were when you what you wanted to be when you grow up?
Yes, I wanted to be a professional baseball player, and I almost there, right? I played in college, and I helped some guys and coached some guys that went to what we called the show in the baseball industry, right? And so, yeah, that was absolutely the dream. And I went as far as I possibly could. And I think what you're talking about, Brian, is in the book, he talks about, right, probability-based thinking, right, is what's likely for me or what's realistic for me. Possibility-based thinking is what's conceivable for me or what's imaginable for me.
Mm-hmm.
And so what you're saying is, and what Gary's saying in the book is, when's the last time you allowed yourself to imagine or to think big, right? Well, you know, let's just go back to the question. Put in the chat box what you wanted to be when you grew up, when you were a little kid, right? Let's get back in that mindset right now. What did you want to be when you were a little kid? Put in the chat, right? You had an astronaut and a baseball player here. Those are pretty typical ones, right? What did you want to be when you were a little kid?
A ballerina.
A ballerina.
Okay. Basketball player. Awesome. Another ballerina. A lot of teachers. Very cool. Lawyer. General manager of a baseball team. What team? That's what I want to architect, police. You guys are doing great. I love this. Couple baseball players. We got a team starting and a general manager. The Phillies. You okay with that, Matt? I'm just kidding.
Yeah, I'm absolutely okay with that, and I'm excited about that opportunity too. I think the point is that with what you just put in there, I love the teacher one, by the way, because this whole course is about, are you teaching your clients how to invest in real estate?
Yep.
Are you showing up with that same mentality to be a teacher? You don't have to be a teacher in school or a professor for college to teach people today. That's what we're talking about in overcoming these myths. Teach them how to think differently. So, right, think about everything you just wrote down. Are you in possibility or probability-based thinking today, right? And a lot of the thing to share there, Brian, really quickly is what Gary talks about on page 57, where he talks about this combination of what stops us from thinking in possibilities, right? And what stops us from thinking in possibilities is a lot of times we think that we need a lot of ability, a lot of time, and a lot of money to be able to accomplish the things that we want. So in order to be an investor, I've got to be really good at investing and analyzing properties. I have to have all the time in the world to do that. And I've got to have a ton of money to make that happen. That's what a lot of people believe and why they don't invest. Well, the truth of the matter is that we know that if you buy a vacation rental or a second home, you need 10% down on that property. When your client hires somebody like you to be able to offer them the expertise, they don't need the ability. You're bringing that. And the time that's going to be taken to find the property, you're leveraging for them. So all they're bringing in that case is the money, right? And there's other different ways of thinking about that. Yet people stop from taking these big actions or thinking in possibilities because they think they need the ability, the time, and the money. And the truth is that as an agent, you're actually providing the vast majority of that for your clients or on behalf of your clients. And more people could pursue investing if you were teaching it.
Yes, I think maybe said another way, in addition to what you just said there, Matt, is, as a real estate agent working with clients, you already have a lot of the knowledge, you have a lot of the ability, you have an ability to change the amount of money that you make. So it's definitely possible for you. Do you believe it's possible for others? Right. So again, it goes to how we're thinking, and then it looks at how do we help our clients to see those possibilities also. So moving into the investing myths, these are just myths about investing, maybe not even be personal, but what does investing mean, or what does it take, or what's what would be necessary. The first investing myth is that investing is complicated, right? Anything that's complicated, it seems complicated in the beginning, right? If you take it one step at a time, do you eventually get there? I mean, think back to the first house you ever sold as a real estate agent. Was the process complicated? I'm going to guess most people would say yes. Is it more complicated than it was today? Than it would be today? Yes, right? And the more you do it, the more you the things become kind of regular or standard in your world, and you're able to move at a faster pace. The same thing happens with investing. Even in the book, it says you never need to know everything in order to do something. You just need to know the right things to do at any given moment. Isn't that interesting? right? And as real estate agents, we're called to be the advisors of our clients. Can you help them to think the right way so that they can do the right something at that time? Anything to add there, Matt?
No, not at all in that case. And the reason why is because, right, it's if we did add something, we'd overcomplicate it. So let's go to the next step here, which is the best investments require knowledge that most people don't have. The truth is that your best investments will always be in areas you can or already do understand. Now, that may seem strange for teaching a client how to invest to overcome that myth. And again, what's so important is we may be on the other end saying like, okay, how do I teach my clients how to invest? So far on the call, I've gotten you give them a book, you give them the presentation, and you overcome these myths in their thinking. Yeah, you've moved pretty far down the road of getting them ready to buy a property once you do that. People's limiting beliefs, almost everyone has the intention of investing in real estate or owning multiple homes or becoming wealthy or making multiple investments in some way, shape, or form or capacity. Not everyone does, right? Why is that? It's the way they think. So the best investments require knowledge most people don't have. Well, do your clients have knowledge of the neighborhood they live in? Right? Maybe not even in the neighborhood. Do your clients know something unique, different, or disruptive about what's happening on their street? Right? Do your clients have knowledge about the small area in the city or the town, right? That they know that a certain property is about to open up, or the coffee shops is about to go there, or a development is going to go across the street, or they just got the zoning to be able to start building the golf course in the middle of that development. We have seen this year golf course communities make a huge comeback, right? The point is, what knowledge does that client have? Right. Could be like here in Austin, all of these tech companies seem to be moving to Austin. Does the client know that a tech company is moving to Austin? Right. And they live in Austin and they go, well, maybe it makes sense to buy something in this area because there's going to be more jobs there. It's interesting because the best investments require knowledge most people don't have. Often, what we're ignoring is the knowledge that our clients do have, right? What do they know that would allow them to make a confident investment, right? That's an area that they understand already, or that would be easy for them to understand. The other side of that is, let's just imagine that the best investments did require knowledge that most people didn't have, right? Well, part of the knowledge to invest, they're going to borrow from you. Your knowledge, your expertise, you're going to enrich their knowledge to make a better decision. That's why they're hiring you to partner with them to invest in real estate. And yet, right, I mean, how did you learn it? Well, you took a course, you got licensed, you got into real estate, you read a book, and you started taking action and representing clients. So could you make a recommended path of actions for each one of your clients to be able to learn a few things and read a book and take a course with you like we're talking about, so that they gained more knowledge to confidently make that decision? Brian, is there anything that you think about, you know what, Matt, I love what you said, and yet I need to say this because it makes more sense?
No, I love the idea of, what are the things that your clients already understand? What do they already specialize in? Warren Buffett is quoted as saying, like, he only invests in the things that he understands, right? So there are things that may seem like a good investment, and his advisors will say, oh, you should do this. And he just goes like, I'm not going to do that because that's not my world, right? I think a good way to look at it is, if you don't have a specialty, or if there's a different area you want to look at, you're a learning-based person. That's why you're on this today, right? So if you're learning-based, think about what's the area that you could grow in your specialized knowledge of that. And maybe another way to look at it is, where is the opportunity, in your world, in your local market, or in other markets that you hear about? Where's the opportunity, and what would it take for you to build that specialized knowledge? And that's the only thing I would add.
So Brian, real quickly, there's just that quote before we take a step forward from Paul Morris on page 63, right? That kind of solidifies this, where he says, real estate provides investors with a tangible investment that is easy for anyone to understand. If profits were lower than expected this quarter, was that because it was a colder than usual winter, driving up heating expenses? Or did a pipe burst? These are issues that any investor can understand. Well, yeah, because shelter's a requirement. It's a human need, right? And so because they have shelter, or because they're buying a house from you, right? Can they understand the potential issues or challenges that may happen for somebody? Well, yeah, right. They just bought a house from you. They get that, right? So let's not overcomplicate. Go back to the other one that we said before, what the investment's going to be. So Brian, let's take a look forward at the next myth, right? That investing is risky.
Yeah, this is one that you're going to often hear, right? Investing is risky. I'm going to lose my money. And Gary says, investing by definition is not actually risky. So the definition of invest says to commit money or capital in order to gain a financial return. It doesn't actually talk about risk. There's another part in here that it's at the bottom of page 64. If you reference your book, Millionaire Real Estate Investor, it says, investing like a millionaire real estate investor isn't about taking risks. It's about having sound criteria, the patience to find the right opportunity, and a willingness to take the correct action quickly. The best investors are dedicated to following this formula. As a result, they're minimizing their risk while they're maximizing their return. Investing can never be absolutely risk-free, but it doesn't have to be risky. I guess the questions I would ask there is just, if you were to hear this from a client, investing is risky, I'm going to lose my money. What knowledge would you have of a market to help show them to paint a different picture, right? If you look at historical housing trends in your area, is it risky, or is it something that, short-term may be risky, right? Oftentimes, if we look at historical housing trends over the last 10 years, 20 years, 30 years in your area, have prices gone up? Yeah. And Matt, you and I were having a conversation about, there's a point in a lot of markets where they go, oh, the houses can never cost more than they cost today. Right. And then what happens, 5 or 10 years from then?
They go up.
Yeah. And they go, oh, it's never going to get higher than it did today. Than it is right now. This is the top. It'll never go higher. And then what happens, within the next 10 years of that?
They go up, I think is the right answer.
Yeah. And historically that is what happens. So again, you're the advisor for your client. So use your specialized knowledge to help them make a great decision, and minimize what I love in that is minimize the risk and maximize the opportunity that comes from it.
Yeah, the only thing to add, Brian, to the investing is risky, I'll lose my money is, think about it this way, right? What's incredible about being a real estate professional is, let's just say one of your friends or colleagues or your cousin or one of your past clients calls you and says, hey, I need to rent a property, right? Or one of my siblings or my kids or coming out of school need to rent a property. Okay, now you've got a renter, let's just say, I don't know, $1,800, let's put it out there, right? And then you have a client that's considering investing and they're saying, I think investing is risky. I'm concerned about losing my money. And well, okay, if you were gonna invest, what would you want to do? Would you flip properties? Would you hold properties? Would you burr properties? Would you, right? Not to get too technical, right? What would you want to do with the property, right? And so, well, I'd love to hold it, and yet I feel like it could be risky. Well, think about it, in real estate, you often have this scenario where you have a captured renter that's looking for a specific property, right? And a client saying that investing is risky and they want to hold real estate. I mean, doesn't that at some point, don't you have all the answers already? See, as an agent, you might have the ability to mitigate a lot of the risk by saying, well, I can appreciate that. I actually have someone looking for this property in this area for what you're looking to invest or potentially invest in to make that purchase. You could be the investor or the owner, right? The landlord of this property, and rent it out to this other individual. So is there a longer term risk? Are there challenges? Yeah, it could be. Yet we actually may know we have a captured client or a captured tenant for the individual for your first investment, right? That's the other way to think about it is, okay, the client has this concern. As an agent, can you help them solve all of that by literally setting up every domino? What's incredible about real estate too, Brian, and it's kind of a funny thing, and it's an afterthought in helping clients do this, is As an agent, you're going to get paid on every side of that domino, right? So not only are you helping somebody figure that out, you're also making multiple checks by helping multiple people solve different problems and teaching a client how to invest, all to overcome, well, I think it's risky. Well, you might hold all the cards and be able to help somebody take that over themselves, right? So the next investing myth is successful investors are able to time the market. And according to Gary, the truth is this: in successful investing, the timing finds you. You know, one of the things, Brian, that we could think about there is what you just said is a big part of that. Right? People would say, well, like, we hear a lot of people right now, and this is a common myth for investors that have been active or new investors. Well, the market can't keep going up, right? Interest rates can't stay low. I might be buying at the height of the market. And again, there are places where that's true. We're not saying that's universal, right? Or that opinion is wrong. You're the agent in your local market. You know that. What we do know is that Austin's market, for example, right? And your market maybe like this has gone up. Then Tesla said they were coming. Then Oracle said they were coming, right? Well, wait a second. The more and more jobs that get driven into a market, right? Unless inventory is being built, it's a supply and demand issue. What has to happen to price? So when we look at it, say successful investors are able to time the market, there is a massive argument in markets like Austin that people have either been wrong 6 months ago or are wrong now. And then people 6 months from now will say that they are wrong. The timing finding you is two things. Number one, are you able to look at that or help clients look at that and understand what that is with the confidence of these are the things that are happening. This is what we can anticipate. Number two, right? If you're willing to hold the asset long enough, you can actually get it wrong and still get it right in the long term. That's kind of some of the things that strike me with that, Brian, and this myth. And I think this myth is coming up a lot right now with timing the market. What do you think about when you look at this one?
It's to me, it's like the timing of the market is it kind of goes along. I'm gonna steal a little bit from the next one, investing myth number 5, where it says all the good investments are taken, right? You might play a game, right? So if you're a real estate agent and you have access to MLS or homes that are on the market, you might play a game that's called I'm gonna make this hypothetical investment today in a certain price range, right? And you look at the homes that are available in that area, in that price range, whatever, and you go through and you do the work of figuring out if I bought this property and determined I was going to hold it and use it as a rental property, I'm going to hold it for 10 years. And you went through and did the work and figured out what kind of return would I expect? What could I rent it out for? What based on what I can tell, what kind of repairs might need to be done or what kind of reserves might I need? If you actually did this, you played this game all the time, right? You're going to come up with properties that are right under your nose in your local market today. And you go, this is a great, like somebody needs to buy this thing, right? By the way, thinking as an agent, when you say someone needs to buy this thing, if you have a group of people that are in a position saying, I want to buy it when you have a great deal, that is the way to be the matchmaker, right? So you have everybody going, I have the money or I have the financing, I have the ability to invest today. And your job is to go out and find the things that they can invest in. Those are most likely not going to fall in your lap. And they are out there. I mean, even in all the hot markets I'm seeing in the chat where people are going, Central Florida's hot, Lakeland's hot, Austin, Matt was saying Austin's hot. It is. There are still deals right now. And you can purchase them if you're on top of it or your clients are on top of it.
Well, and as you get into this final myth that we're going to cover today, right? Before we get into kind of questions and where do we go from here so we can help our clients to invest, all the good investments are taken. And what you were saying, Brian, is so important. So I love that game. Let's look at that game a different way, right? Let's start that game from the perspective of, okay, let's imagine, right? And if you guys can place yourself on mute real quickly, and then we're going to open up the chat. I know you're excited about that, right? Let's imagine, right, that you create the criteria for yourself, right? And you say, instead of creating it for my clients, right? You say, if I was going to buy a property right now, right? and I'm going to buy a property right now, what is my criteria? What exactly am I going to buy in my own market? And it's not just a game. It's not just hypothetical. It's not just study. You say, I'm going to buy a property. I'm committed. I'm going to find a way to be able to make this work. What's going to be funny, Brian, is no matter what market you're in, you will find more properties than you can buy yourself. So instead of making it a game, let's just say you decided to make it real. I'm going to buy okay, I'm finding the property. Well, as long as you don't stop doing that, you'll find 2, and you'll find 3, and you'll find 10, and you'll find 12. And then there'll come a point where you go, man, I can't buy all these properties, right? There's so many great deals. The exact opposite of all the good investments are taken. Well, the reason why I share that story is there's a really influential person in my life by the name of John Clyde, who helped create a lot of opportunity for me. And what I just shared with you is exactly how he built his sales team, which he parlayed into buying market centers, into becoming a regional director and growing out other aspects of his life. He started buying properties. He was looking for deals. He found so many he couldn't buy them. He created a list of those properties and sent them out to all of his clients, his current database. They weren't even investors, just to the people that were in his database, without saying anything other than, if you're looking for an investment, here's what it looks like. That list still runs to this day. And he was able to teach his clients how to invest by the happenstance of realizing there were so many great investments, he couldn't buy them all. Brian, anything else that you think about when you look at this, you hear that story, or you think about what is it specifically that we need to do or could be thinking about to teach our clients how to invest in real estate?
I think maybe this is just another part of the myth, is that oftentimes we look at, if the market is doing well, if the economy of that local area is doing well, how would there be any good investments that are there, right? If the prices are going up, how does that happen? And Gary talks about the kind of the second force of what creates opportunities. And there's positive and negative forces, right? So positive, maybe things like relocation or marriage or family growth, right? And it's a way for you to be a part of that conversation. The other ones are divorce, death, and debt. Those would be the negative forces. Those are things that will drive opportunities to your doorstep for investing if you're open to it. I mean, if you're not looking for it, you're not going to find it. And I'll just say that personally, Matt, like in our conversations, we look at things you can invest in, and they come up pretty often, even in a very hot market, and things that we look at today and we go, okay, well, should we invest in this? Should somebody else do it? What's the best fit here? So that's a good place to be in asking yourself those questions. So Matt, we're talking about these different myths. We're talking about working with clients. I mean, if somebody wants to dig deeper in this, what do you suggest?
Well, I suggest that we follow the plan that we said, right? Read the MREI book, the Millionaire Real Estate Investor book. Check out that kellerinc.com presentation that you have there. And then here's the other thing. The truth is that, Brian, you and I have been working on something for quite some time, actually over the past year. And in March of next year, we're going to have the official launch of the Millionaire Real Estate Investor course, meaning we're going to have a group course for MAPS that, Brian, you and I are going to be the instructors for starting next year. And we're going to teach this course 3 times. And so I know you're putting the link to that course in the chat box, right? We're excited about it. We've been working on it for a year. We've earned the right to be able to utilize the Millionaire Real Estate Investor material and the Keller Williams material for that as a backdrop and a foundation for teaching you how to invest and going deeper in how do you teach clients how to invest. So this is a starting point, and obviously we'll go into far more detail over 10 sessions, those 3 months, every single time that we do this, with additional content and a Facebook page and community for people to exchange ideas and review deals, and additional interview content. There'll be a website with more for you to take on as well. So we're in the process of building all that out. And if you like this conversation, you like Brian and I and the way we presented it or asked questions, right? We can jump in this way. Brian put the link in there for you to be able to, you could register now, or you could check that out as we get into March. With all that being said, I think it's time, Brian, for us to open it up for what questions that people have, right? So we've got a few minutes, give or take 10 minutes or so. You can go ahead and put it in the chat box if you want. You can also take yourself off mute and ask a question about any of the myths that we covered, or about anything pertaining to how do we teach our clients how to invest? So does anybody have any questions that Brian and I could answer? Yeah. So, Eli, for the course being addressed, there'll be 10 sessions over 3 months. The exact last sessions, just so you know, will be addressed based on what national events or MAPS events that we have. So they're going to fall in that way. There's also going to be background content provided, a Facebook community, as well as additional content and interviews that you'll be receiving as well inside that course. So it's going to be far more than 10 sessions. Those will be the live sessions, and you'll get all the additional content inside that course. You just want to make sure that we honor people over the course of national events and MAPS events, so that they can take that week and go attend those other events and not miss the course at the same time. Okay.
Hi, guys. This is
Yeah.
Giselle. I'm from New Jersey. Thank you so much for this training. I was wondering if we wanted to host a webinar for our client base on this topic. Are there slides that we already have that are encompassed with the MREI book? Or because I've read the book, but I was trying to do it on my own, and I'm like, wow, there's just so much information, but you want to consolidate it and make it simplified like you guys did. So is there anything out there that we can utilize as agents so that we can host something like this for our clients?
I think Brian's finding it right now. He may be grabbing the link to give it to you.
I'm going to repost it right now. Yeah.
Yeah. To tell you where it is, it's on kellerinc.com, kellerinc.com. And then if you go to MREI and resources, there you go. Right. Eli's posted it. Brian's probably posting the exact link for it as well here. And that gives you a template for the MREI. What I would suggest is take a look at it, decide, hey, am I just going to teach this, or am I going to use that as my template to update and brand my own material? And then you can obviously choose either one.
Awesome. Thank you so much.
Yeah. Christy said, Brian, I'm going to let you take this on, right? Even though there's a lot of ways we could answer this, right? What's the best way you could finance your first investment?
I mean, my answer is however you can, right? So I guess it kind of depends, right? If you have the savings and you can finance that, that's a place to start, right? If you find a great investment and you don't have the savings, really investors may partner with you for the right deal. If you go and find the right deal and you don't have the money, could you partner with somebody with the money? So maybe your first investment isn't something you finance at all. So I guess it's a little bit more personal. I think there's a lot of different ways to do that, and that's part of in the longer course that we go through is going through all different ways that you can do it. So Rich Anderson just put in, use the equity in your personal home. That may be an option, right? Like if you have your primary home, you may be able to take a equity, line of credit or something. We just heard from somebody yesterday saying it took a little work to find one right now, but they got great terms on one right now, and they can use that to invest.
Brian, what we're covering in the course and it's also covered in the book, right, is the fact that in order to start your real estate investment, what a lot of people do is they find deals for other people, right, as an agent, and they get paid a commission for it, right? Or they get paid a portion of the equity or part of the deal, right, to generate the cash if they don't already have it, right? Guys, it's outlined in the book. We're going to talk about that in the course as well, right? And yet, if you don't have the cash, if you don't have the home equity line, can you partner with someone and you do the sweat equity, so to speak, right? And you earn a portion of the deal, or you get paid for the transaction to put that cash aside to be able to finance that first deal. The other real quick thing to think about is pick up the phone and call, Keller Mortgage. They're great about this, and call your local lender, and yet call Keller Mortgage and ask them, right, if I was going to finance a property today, right, how would I do it? And what would it take to put down on the property, and what do I need to be able to get that done, right? And do I have the credit to get that done? Can I purchase that property? This is also just like you recommend to your clients, right, in buying their first home. Have you called your lender and had this conversation and asked all those questions, right? It's another piece of it. Eli said, will the course include ideas, scripts, et cetera, for the use of our initial buyer consultation? Changing the conversation is my biggest takeaway from this. Eli, it absolutely can. And what Brian and I can do is in that course, we're going to make requests for additional content you'd like for him and I to record and deliver to you. So we can certainly do that in the course as additional content we'll provide. And so we've got a couple people that have raised their hand. It looks like, let me see here.
Here we have Gift, I'm going to ask you to unmute if you have a question.
Yeah, hey, thank you so much. So we've got a lot of investors in our network already, and they're actually beginning to move outside our area.
Hold on. Go ahead, Gift. Sorry about that.
Okay, no worries. So they're moving outside of our area. So they want to look at like South Carolina, Florida, and other areas of the country. What's the best way to manage those type of clients that we have? I know we could go through the KW network to find them, but any recommendations or best practices?
So you mean your current client base is staying in your market and they're looking to invest in other markets? Is that correct?
Yeah. That is 100% correct. So they're going to live here within our area, but they've got so many rental properties that they want to start looking at other areas of the country. We've actually gotten them that successful.
Yeah. So I would say that, Matt and I both work with clients that do that actively. What I've seen work is that they're partnered with an agent that's local to that market. And they may have multiple people looking to make multiple investments or multiple people making investments in that area. And they create a partnership so that it's not just, a referral for one transaction. It's a referral for all the business that client will create in that market. And it may be different than a typical referral, maybe, so that's something for you to consider.
One other thing that I would say in answering that question is, right, your ability to broadcast or identify the communities or markets that be best for that client is going to be dependent upon the way that you ask, how specific their criteria is, how you put that out into different communities, right? And then the relationships that you build based on agents that say, yes, there's one or more of that property in my community at this price point, right? Or that you have a place where you can have that conversation. It's our intention actually inside of this course that we're delivering, that we're building in community to solve that and answer some of those questions. Obviously, you've got the referral that you can use inside Command, and that's a great place to do that. There's obviously other Facebook groups like the Bold group, our Mastery Client Community, and others where you could ask that question as well. So some of the just suggestions that come to mind on being able to do that. Yet it's a great place if you don't have the particular place where the client wants to be able to get the exact criteria or cap rate or rate of return or something the client's looking for, and then place that idea, that concept in communities so that you can build a relationship and be able to see where the client could go or what you would target. Does that make sense?
Yes, thank you so much. Is a Facebook group that we be investment we can belong to, or what is it?
Yes, there is. And that is, if you go ahead and click the link that Brian shared, I'm sure he'll go ahead and share that again, right? And you register for that. After this call, you're going to receive, because you've signed up for the call, you receive the link, right? And all the additional pieces for this community that we're setting up as they come out, the website, the Facebook community, those things will come out to all of you before this course is launched. So you can join, so you can be a part of that as well. Okay.
Thank you.
Other questions for anybody that's raised their hand? We can probably take one more question, right, to be able to help you with. So anybody else have a question? Okay, well.
Hey, Matt.
Yeah, go ahead, Brian.
I saw one question that was asked early on here that said, how do I steer clear from liability for the knowledge I am sharing? I would say that is something that's a great question to be asking yourself every day as a real estate agent. And I would look at how do you share facts about the past? How do you ask questions to help them look at things differently? It's not for you to make promises about the way that anything's going to look in the future, just like it isn't in real estate, right? Like I would not advise you to tell somebody, oh, go buy this house. It'll be worth X, 5 years from today or 10 years from today. You could look at a historical average and ask them a question, say, based on this historical average, what do you think would happen to the values in this neighborhood? there's not liability in asking a question that would cause them to think differently. So maybe that's a way to look at this.
Yeah, the last thing to say to that, or a different perspective, is a lot of times agents will get in trouble if they say, hey, the cost per square foot of an improvement is going to be X, or you could anticipate it'll be something around this, right? And any of those things, right? Just think to yourself, who is the person that has the license that I need to make a recommendation to anytime I make a generalized statement about anything in real estate. So, you want to start some things with, I am not licensed to do this, right? We need to contact this person. These are things that other individuals have gotten, yet I want to connect you with the right individual so you can get that exact answer, right? That style dialogue is going to allow you to reconnect them with other people. Let them know that this is not going to give them a guaranteed return, right, on what you're talking about. And then you want to make sure that they talk to an expert and it's not you in that area. So that style of communication, asking the question and getting them to an expert, are two simple ways, right, to help protect you from sharing information that people could hold you accountable for if they go ahead and make an investment. And that is, you're exactly right, Brian, probably one of the most important questions that we can and continue to answer, so that you can advise to this, you can help clients do this, and yet in a way where you're not personally accountable or liable for giving advice that, unfortunately, you may not have all the information on. Okay, well, we could obviously continue doing this in Q&A. We are going to at least 3 or more times next year when we present this course. We're excited about the opportunity to do this. This is really just the tip of the iceberg, so to speak, of everything that we're going to share and desire to share. And we wish to build this community along with you, right, to deliver what you want and value that you need. Hope and trust that you took something away from today's call. And, on behalf of Brian and myself, we just want to say thank you so much for making this commitment to be here. And hopefully you took something away to be able to teach your clients how to invest. Brian, anything else?
No, just everybody have a great day. Check out the link, join us in the course, and we'll be on the journey together. Thanks a lot.
Thanks, guys.